Good evening. Here's a special edition of a very special show right here on ET Now. I'm Supriya Srinath and the crucial RBi board meeting is underway. You can call it the day of reckoning as far as the governor and the board is concerned. The central board is meeting currently amidst a public standoff with the government over a range of issues that range from liquidity crunch to NBFCs to prompt corrective action to the war over reserves. Sources say the central bank may blink on the PCA norms. We can't say the same for everything else. Before I go any further, let me take it across to my colleague Neha Bothra, who's been tracking that meeting, and she's joining us right here from outside the RBi headquarters. Neha.
It's been about 7 hours since this meeting started, a very crucial meeting. As you pointed out, Reserve Bank of India's board members will dwell upon several areas that have been friction points between the government and the central bank. Most importantly, of course, the PCA framework is likely to have been discussed in the meeting today. Remember that the government has been urging the Reserve Bank of India to make way for measures that could boost lending in the economy by way of aligning the capital norms with Basel III norms that would free up about 1.5 lakh crore in the economy. However, the RBI has... Okay, 1 second, Supriya, I'll just come back to you. I see many of the board members leaving and we are just trying to get more on that. Supriya?
All right, there seems to be some movement at the RBI and Neha Bothra will be joining us in just a bit. But just to quickly tell viewers, what all have we been picking up from the RBI headquarters? And in fact, this meeting began under a lot of speculation that could Governor Patel be putting in his papers. For now, we know that that's not going to happen. In fact, I think the high voltage tension and drama has been diffused. This has been a conciliatory meeting, as we've been given to understand by our top sources who were in attendance there, and we have even been told at this stage that there is no question of the governor resigning whatsoever. We've also been told by top sources who attended that meeting that the government and the RBI have made their positions clear, and the fact that either of the two sides are willing to review some of their polarized positions that they had held on to earlier is good news, because this will mean that some substantial decisions will be taken. But of course, there are a lot of people out there who continue to insist that all of this really has to do with the reserves and why the government wants around 3.2 lakh crore worth of reserves be transferred to them. I've got a stellar lineup right here of guests joining us. But before I go across to Mr. Govind Rao, Mr. Ashwini Mahajan, Maithili Busnurmat, and of course Mr. Vipin Malik and Mr. H.P. Ranina, let me quickly put in perspective what is this all about and the key issues that are before the board. First, let's listen into Finance Minister Jaitley as he spoke exclusively at an event organized by the Times Group, the ET Awards. And he did lay the groundwork for this meeting by sending out a message to the central bank, which is just a stone's throw away from the Nariman point at Trident where he was talking. And he made this war cry about more liquidity and no limits on credit.
We need a certain level of credit flow as far as our entrepreneurs are concerned. Even if the overall situation on credit improves, we have to see that there is no sectoral stress. We have to ensure that liquidity is maintained. And therefore, as a reaction to what the sins of 2008 to 14, which were collectively committed, as somebody had said, centuries need not suffer. Sadiyon ne khata pai, sada pai. And therefore, this will have to be done in a manner where you restore the health of the banks, you restore the discipline as far as the banking system is concerned, and at the same time, we don't end up throttling growth by throttling credit and liquidity in the market. And that is a key issue. Any other issue can be an issue of diversion.
Okay, let me take this across to our guests right here. We've got plenty of voices and we will go to those voices as and when those happen. But let's go across to our guests right here, and our guests are joining us with their take on this matter. I've already introduced the panel. Maithili, if I may begin with you, this morning started with a very high voltage speculation that could Governor Patel be resigning? Is there going to be a spate of resignations at the RBI? How hostile is that meeting going to be? Before I go across, Mr. Govind Rao, in some sense, are you breathing a sigh of relief that tension has been diffused? At least the two sides are willing to talk.
Oh, well, yes, definitely. It's good to know that the situation has been diffused and both sides are willing to see reason and are conducting whatever deliberations they have in an amicable environment with a little bit of give and take on both sides, not just one side. I think the government must be willing to see on some aspects where the RBI is entirely within its rights. The RBI too must be willing to see the government's perspective. So, it's good to know that at least for the moment, better sense has prevailed.
Mr. Govind Rao, let me come to you. And do you believe, we were speaking to Pradeep Chaudhary earlier today and we had this conversation. We are picking up from sources that a presentation has been made on capital early on. We're also given to understand discussions are conciliatory. We're also given to understand that the RBI may even be willing to review its PCA norms. But from your point of view, is the good news here that the two sides are willing to talk? Unlike the standoff that we saw up until this morning, you know, a war of words. Something was said in a speech, it was retorted to on a tweet by the finance ministry. Do you believe this has given way to at least a dialogue happening between two sides of the spectrum?
I think it's a very good sign. The dialogue is happening, and you know, I hope it will all be in a done in a very professional manner, with the open mind, rather than sort of taking already taking the positions and rigid positions and moving sort of taking thereof. I think RBI is making a presentation on the capital adequacy, their model, and trying to explain what their this thing is. My understanding is that all the PCA norms, when they were put in place, before that there was a lot of these issues were shared with the Ministry of Finance. It is not that it has not been shared. There is also this issue. I think the Finance Minister saying that between 2008 to 2014 there is phone banking. Well, I mean there was indeed a phone banking, but then that's putting the thing in a very simplistic manner. I mean, as a politician, obviously he would do that. But then there were also the issues of Supreme Court cancelling coal licenses, and that was done at the suggestion of the Ministry of Finance, Government of India. I mean, it may be wrongly done, but the point is that at that time the things should have been seen what the consequences are going to be. And then the more and more things coming out of Nirav Modi and this thing, that is not. I mean, that not everything can be put on the phone banking, but true. I mean, there is a bigger problem of building capacity in the public sector banks, ability to really evaluate the risk, and that I mean nothing has happened thereafter. As owner of the banks, government had a much greater responsibility of doing the reform of the banking system of the public sector banks, rather than asking the regulator. It's a very funny situation. Government is the owner of the bank and telling the regulator, you don't regulate me. I mean, that's not something which is good for the depositors in the country. That's the point I am making. Depositors need to be given incentive in terms of interest rates. But whatever be the case, I mean, the safety and security of the banks is much more important for the depositors. Of course, lending is important. The economy has to grow. So there has to be a much greater interaction, and I think the government eventually will have to take steps to move away from the ownership.
Right. No, absolutely. That's a very important point, and I think eventually that discussion will have to veer towards that. We will do that in just a bit. But Mr. VP, Mr. Vipin Malik, you are joining us right here, and you've been on the RBI board. Was this the worst, if I may say, the overhang with which the board meeting began? I mean, when was the last time the RBI board meeting began with people wondering, is the governor going to quit or is he going to stay? Will his deputy be asked to leave, or is he going to stay? So in some sense, this is perhaps the worst overhang with which this meeting began, and which is why my question is, are you at least relieved that they are talking, and are you at least relieved that they are willing to review both their positions, both the government and the RBI?
I am surprised that why should the governor or deputy governor should resign. After all, there are differences, and those differences can be sorted out by sitting on across the table. So, I mean, why one should look into the resignation of a governor or a deputy governor? I mean, Reserve Bank is making it a point, and their point is that our reserves are not enough to an economy like India, which is a 1 trillion economy now. Now you have to, I mean, reserves have to be seen from the point of view of the external debt. Today our external debt is around $535 billion. And out of $535 billion, $92 billion is a short-term liability which is coming up within a span of 12 months. And what is our reserves? 398 billion. Out of 398 billion, some is in gold, some in the securities of the USA, some securities of the European lying with the central bank. So to pay 98 billion as a short term, either we have to sell the American securities which are lying in America. I mean, only then the money will come, or we have to sell the gold. If we sell the gold, then that gold reserve will come down. Then what will happen to the stability of the country? When I say stability of the country, means that we have been rated as BBB stable. The country has been rated, and for last 4 or 5 years, I mean, in 16, probably on 16, it has been come as a BBB stable. So if you want to be a negative stability,
Mr. Malik,
then what will be the interest cost? Ultimately, the borrowing.
Mr. Malik, I take that suggestion and I take that concern on board. But give me a minute. I will go across the table and come back to you right here, Mr. Mahajan. This meeting began, and a lot of people said that people like S. Gurumurthy, who were pushing for more liquidity, who wanted a review of the PCA norms, things would have been very confrontational. Thankfully, that hasn't been. It has been conciliatory. The fact that the RBI is willing to review its position on PCA has brought in big relief for the banking industry. I'm presuming it's going to be a fillip for credit lending and offtake. But the reality, sir, also is at a time like this, when there is a big NPA cleanup and you go and dilute norms for banks under prompt corrective action, are you not risking them? Are you not risking another round of NPAs in the making, another round of a vicious bad loan cycle? Mr. Mahajan?
In fact, I think this is like taking it too far. In fact, the economy today is hungry of credit. Credit flow has totally stopped. So, to a great extent, this has been happening primarily due to the PCA norms, and secondly because of the restrictions imposed by the RBI on giving new credits. So, if this happens, in fact, what I'm finding is that these PCA norms have been over and above the Basel III norms. So that is no good for the economy, and there has to be a legitimacy, there has to be reasons for the same. And nowhere in the world we find Basel III plus. So if that is happening, and in fact, obviously you will appreciate that the RBI is not bending its position because of any other reason, and this is there is a big argument which the board is really making, and therefore I feel if RBI is bending, that's a good thing. And in fact, I feel that every problem has a table solution, and in this case also they are sitting on the table and finding the solutions. I don't think there is going to be any problem of NPAs like that, because NPAs have been because of the bad lending in the previous regime, and if we take due care, then definitely it is not going to be that big a problem now.
Okay. Let me go across to Mr. Ranina, and he's been on the RBI board for years. And Mr. Ranina, given the two diametrically opposite and yes, in some way complementary, mandates, one is price management and price stability, the other is fueling growth. Can the RBI and government ever see eye to eye? And which is why we've had intellectual differences through the years, through decades now. I mean, there are legendary talks of Mr. Chidambaram not getting along with Y.V. Reddy or Subba Rao, but those were intellectual differences. And in some sense, for the first time, we're actually seeing differences come to a point where we are discussing, will there be a resignation or not? But given the two seemingly opposite mandates, is this bound to happen?
Well, this is bound to happen, and in fact, it should happen. because there must be differences of opinion. You can't have a situation where everybody agrees. The whole object of having an independent board of directors is that they should take an independent view. And the government has always respected the autonomy of the Reserve Bank of India. Let me tell you that in the 11 years that I've been on the board of RBI, never have I ever been approached by anybody in the Ministry of Finance or anybody from the government to project a certain point of view. So there has always been an arm's length situation between the government and the RBI. And the government has respected the RBI's autonomy, whatever may be the individual views of the finance minister or the finance secretary. So my view is RBI will prevail and RBI should prevail, and the government will accept it. There may be some differences which may have now come out into the open, but we should not make a mountain out of a molehill, because these differences are in the public domain, and I think it's good that they're in the public domain so that everybody knows what are the issues involved. But ultimately, the RBI's views will prevail, and I'm sure about that.
Okay, ultimately the RBI's views will prevail, and you're sure about that. Let's keep our fingers crossed that views will prevail and there will be greater harmony. But Maithili, let me come to you, and I think let's talk about seemingly important issues. One of the issues, there seems to be meeting of minds and there seems to be some let off in steam, is the whole PCA review. Apparently the RBI is willing to review its position, but it wants to stay absolutely stringent as far as the NPA norm is concerned. Is that pragmatic? Are they balancing out the interests of an economy? Are they balancing out, the need for credit while keeping a very strict vigil on the bad loan situation?
Supra, before I answer your question, I'd just like to respond to what Mr. Rainina said. When you use the words that RBI's views will prevail. Now, I think when the relations are so fraught, when we use words like RBI's views will prevail, it sends a very wrong signal. I think it's better if you say that both sides come to an understanding, because these are very critical, because the moment you start seeing it in terms of egos and in terms of entrenched positions and whose views will prevail, that's really a very dangerous path to go down. Now, let me answer your question of PCA norms and RBI being willing to relent on some and not on the other. I think the RBI is more than the PCA norms are linked to what they had gone in terms of the Basel norms. And here it is a fact that we are Basel plus. In fact, the Bank for International Settlements, which is basically the author for the Basel norms, had also admitted in a paper in 2014 that RBI's norms are stricter than in many jurisdictions, are higher than what Basel norms themselves had wanted. So there, I think there is a case for a rethink, because although the RBI has given the argument that it takes time to resolve issues in India, at a time when we are having problems with credit, I think it's important that all policies should be counter-cyclical. The RBI's basic interpretation of the PCA norms, we also have 3 heads for PCA norms, 3 categorizations, not only in terms of capital adequacy, also in terms of NPA levels, and also in terms of net losses. Now, the problem really with NPA norms is that different countries have different definitions, and I repeat, different countries have different definitions for what constitutes an NPA, and we have gone on to entirely in line with international norms on this. So, the problem really is that when you talk about capital, the RBI doesn't give you banks sufficient time to make provisions. Banks' request was only that if you want us to provide, we are willing to provide, but don't ask us to provide overnight. A completely rational, logical demand. So, the RBI has tended to see these things in a very theoretical, textbook fashion, and government naturally, as a representative of the people and more concerned with growth, employment, is also bothered perhaps even more about credit. So, I think it's important that both sides sit down at the table, understand each other's issues, because ultimately, let's be very clear, both are working in the interest of the country.
Dr. Govinda Rao, if I may come to you, do you agree with Maithili that, both are working in the interest of the country, they both need to sit down and talk? Point well taken, point appreciated, but is it also true that the RBI is being far more stringent on the Basel norms, or is there some truth that lies? We were having a conversation with Raghuram Rajan, and he said while the RBI is stringent on some Basel norms, it's pretty lenient on the others. So it kind of balances itself out. Do you agree with that? Because my only fear is that the same RBI which was blamed for looking away the other direction when this round of NPAs were mounting, is perhaps being asked to do exactly the same this time around, to look away from weaker banks, to dilute their norms so that they can go ahead for lending. I know there may be a credit need in the economy, but can we afford to not ring fence those banks? Dr. Govind Rao.
Yeah, no, in fact, you know, as I said, the banking situation today is far more complex than just the looking the other way. When you say looking the other way, it is both the government and the Reserve Bank. And there is no reason to believe that, you see, the things have changed all that much. When the Prime Minister comes and says that I will give loan to MSMEs within, 60 minutes. And when you have a large number of the NBFCs being, these things are being taken over. You have a whole lot of problems still there. And the 2014 thing which Maithili mentioned, at that time we didn't even know what our non-performing loans are. In fact, it was Raghuram Rajan who was asking the people that would bring out the thing. Everything was put under the carpet, and then evergreening of the loans was continuing forever. I mean, it is only after 2014 we have come to this particular situation. Now, whether, Basel norms are stringent or not, this country at this particular moment after time, at certain point, you need to really ring fence some of these. Maybe you can work out. There is nothing that prevents the government from infusing more capital. Ultimately the capital adequacy ratio is the important thing. If the government can infuse a little more capital, and then the basic point is, when Mr. Jaitley, fell ill, the entire, burden of discussion was between the bureaucracy and the governor. And the bureaucracy takes a particular stand. I mean, it is important for the minister to listen with the governor, reason it out with him, and sort out the problems and see what, I mean, it is not that the PCA norms came just like that. PCA norms were discussed with the government and then put in place. So the point is, the government of India should engage the Reserve Bank governor. Now, let me also tell you, public interest, sort of these are not elected people and all that. You see, when, I have written on this, when the markets fail, the governments take over. What do you do when the governments fail? I mean, it's a very clear case of government fail. It is here that the institutions of checks and balances will have to come into place. RBi is an important instrument of checks and balances.
Right.
And so obviously, you can discuss the matter with the Reserve Bank of India. It is wrong to say that they will not come to the table.
Right.
Now, if you go to the court and give an affidavit and then say that against the Reserve Bank of India, and then say you come and sit with me and listen to me what I say, that is not acceptable.
No, fair point indeed. I agree with you. I don't think the Reserve Bank of India or the government is acting in the most cohesive and in the most conciliatory manner, at least not up until this morning. I'm glad that things have not been hostile in this meeting. But Ashwini Mahajan, I will give you a quick question and then I'm going to take a quick breather. And the quick question has to be about
Give me a chance.
People have said everything else is a smoke screen. The real fight, I'm coming. The real fight is on reserves. As far as the RBI is concerned, it has very categorically said that reserves can't be transferred without keeping an eye on inflation. Should the decision then be left to the RBI?
In fact, I don't think the real fight is over the reserves, because the government is the board is asking only to make norms and rules about the reserves and not the transfer of reserves, as the government is also categorically stated. So I think this is a wrong notion.
Okay. Maithili, you want to come in? I think Maithili wants to make a point there, and then I'll have to take a quick breather.
Yeah. Yeah, Supriya, I just want to make a very quick point to respond to what Dr. Govind Rao said. He said that when the RBI fails and the government fails, he compared the two. The difference is that when the RBI fails, there's nothing much that can happen, because the governor is not remotely as answerable to Parliament and to the people as in many other countries in the world. Whereas when the government fails, we can elect a new government, and that makes a whole world of difference.
The reality is that the failure of either is going to be catastrophic as far as our economic landscape is concerned, and let's hope that neither of them fail and there could be some meeting of minds. But on that note, I'll take a quick breather. We'll come back and discuss the other stories as well, and thank you very much each one of you for joining us on this edition and this debate. We will keep the conversation going as far as the RBi board meeting is concerned. This is a moment of reckoning as far as India's central government and the central bank is concerned.